Does the 921 EMA really work on gold? I tested it with 100 real trades, and I found something I didn't expect. In this test, I used the 200 EMA to identify the main trend and the 9 and 21 EMAs to find entry points. But what I learned after examining these 100 trades wasn't just about these indicators. The main problem with many losses was not the strategy itself. It was 3 wrong patterns that turned a good entry into a losing trade. So let's quickly go to the backtest and see what confirmation we get. Before we begin, we need to clarify one thing. No indicator alone can predict the future of the market. The EMA only helps us see the structure of the price movement better. The purpose of this test is not to prove that the 921 EMA is a magic system for getting rich. The goal is to see what we actually get if we use this combination with specific rules and proper risk management. The test rules were simple. First, the EMA 200 determines the general direction of the market. If the price is above the EMA 200, we only look for buy positions. If the price is below the EMA 200, we only look for sell positions. After the trend is determined, we wait for the confirmation of the EMA 9 and EMA 21. But just the cross of these two averages is not enough. Because one of the biggest mistakes of scalpers is that they accept every cross as an entry signal. And this is exactly where the first problem begins. Important rules for trading in reverse trends and very fast, because if the rules are not clear, any backtest can give a wrong result. Rule 1, EMA 200 is used only to identify the main direction of the market. Rule 2, to enter, we wait for the confirmation of EMA 9 and EMA 21. But only the cross is not enough. The price must move in the same direction as the main trend and have a sign of continuation of the movement. We place the stop loss behind the last important price range, and to make the test real, we specify the target before each trade. Now let's look at 2 real examples of backtesting. In the first trade, the price was above EMA 200. That is, the overall trend was up. After a short correction, the price returned to the short-term EMAs. At this point, EMA 9 crossed above EMA 21 again, signaling a reversal of bullish momentum. This was our entry point. Entry, after the confirmation candle closed. Stop loss, below the last low formed in the correction. Target, based on a risk-reward ratio of 1 to 2. That is, if we risked $50 in this trade, our target was $100 in profit. After entry, the price continued its upward movement without touching our stop and reached the target. The result of this trade, a successful win with full compliance with the rules. But here's the important thing. This trade did not win only because of the EMA cross, because it had 3 simultaneous filters. The trend was in line with EMA 200, the entry was confirmed by EMA 9/21, and the entry point was taken after the correction. Now let's look at an opposite example. In the second trade, the price was below EMA 200. So according to the rules, we were only looking to sell. The price made a corrective move towards the short-term EMAs. After the EMA 9 fell below the EMA 21 again, and the confirmation candle closed, we entered the sell trade. Entry, after confirmation of a short-term breakout. Stop loss, above the last correction high. Target, twice the risk amount. In this trade, the price continued its downward movement after the entry and reached the target. But what is important in these 2 trades is not the profit itself. The main thing is that we did not follow every move on the chart. We only entered when several conditions coincided. And this is exactly where most traders make mistakes. They see only one signal, but do not examine the whole market story. Now it's time to see which mistakes cause the most losses out of the 100 trades. If you found this quiz interesting so far, give it a like, because we are going to the most important part of this test, 3 specific patterns that made the most losses. These patterns that are very losing are the ones that we should not trade in the trend of the range at all because it is very losing and it is not worth it. But by observing one point, we can trade in the trend of the range. How can I say it now? Usually the trend of the range has a ceiling and a floor that we should enter. But if we enter in the minor or middle of the trend of the range, we will lose because the market is accumulating liquidity. So we open a sell position at the ceiling, put a stop, or those who enter a buy position at the floor, put a stop below the floor, follow these points. Enter at the floor and sell at the ceiling, or vice versa. Enter at the ceiling, sell at the floor. Only if we have SEMC confirmation, we will have a lot of credit confirmation, so pay attention to this point. Well, the positions that we open only have one mistake, and if we observe them, we can increase the win rate. Section, first mistake. Enter only with EMA cross, 9 EMA cross, and EMA 21. When the faster line crosses the slower line, many people rush to enter the trade. But here's the problem. The market doesn't always move after a cross. Sometimes this cross is just a short move to gather liquidity, and then the price reverses in the exact opposite direction. In my testing, many losing trades occurred when the EMA cross formed in a powerless area. That is, the price had no clear trend and no significant support or resistance behind the move. So the first important rule I took from this testing was, an EMA cross alone is not an entry signal. We need to see where the price is in the market and whether there is any real movement behind this signal. Section, mistake 2, ignoring trend strength with the 200 EMA. The second mistake was trading against the main trend. This is where the 200 EMA comes into play. Many scalpers like to hunt for every small move on the chart. But the problem is that when you enter against the larger trend, the probability of losing the trade increases. For example, let's say the price is below the 200 EMA. This means that the overall market pressure is mostly on the selling side. But suddenly the 9 EMA and the 21 EMA make a small bullish cross. Many traders think that this is the beginning of a big move and enter the long position. But most of the time, this is just a short correction, not a trend change. In a test of 100 trades, it turned out that the quality of the trades was better when the direction of the 200 EMA and the 921 EMA were in line. This means that we are not trying to fight the market. We are just trying to enter with the main move. After reviewing 100 gold scalping trades, one important conclusion became clear. This strategy does not win because of the 921 EMA and the 200 EMA. I tested 100 times myself, but I did not want the video to be long, so I could not include all 100 trades here. These were just the ones that were tested. The main advantage comes from having clear rules. These 3 filters had the most impact. First, being in line with the main trend by the 200 EMA. Second, waiting for a real confirmation of the 9 and 21 EMA, not just a simple cross. Third, entering at a point where the price still has room to move, not after the move has ended. If you like this model of real tests and would like to review different strategies with real backtests, be sure to subscribe to the channel. Because in the next videos, we'll go over testing different strategies on real markets and see which methods are really worth using and which ones just look attractive.